Gold has spent 5 consecutive weeks defending the exact same support zone, and the herd is still leaning short. 0.5 weeks. Same level. Same sellers pressing the same breakdown that never comes. Meanwhile, the 4-hour chart just printed a bullish hammer on Friday's close, and the 1-hour MACD has flipped positive. This week has one danger zone and one 3 to 5 day opportunity, and I'll show you both right now. The line that defines your entire week is $4,133. Above it, we are chasing $4,200 and potentially $4,220. Below it, the $4,040 support zone becomes the target. Stay to the end. I'm giving you 2 Monday scalping setups and 1 swing trade that can run the next 3 to 5 days. On screen text for first 15 seconds, $4,133. The line that defines your week, 2 Monday scalps plus 1 swing. Here's my structural bias for the next 3 to 5 days. Bearish fade, but only until proven otherwise. The weekly trend is strong sell. RSI at 39.37, below 50, leaning bearish. MACD on the weekly is deep negative at -47, confirming strong selling pressure. The ADX at 42.99 tells us the trend is established, not weakening. But here's what most people miss. The daily trend just flipped from sell to buy, the 4H is buy, and the 1H is strong buy. That's a massive divergence between the weekly structural trend and the shorter-term momentum. Write this number down, $4,074 to $4,112. This is the 5-week support block that has held every single breakdown attempt. If this level breaks this week, I mean a clean daily close below $4,074, the whole monthly structure resets and we are looking at $3,887 next. But here's what the herd is missing. The liquidity sits above the market, not below. Most retail traders are still holding sell positions from that $4,200 rejection. Their stops are stacked above $4,200. And smart money knows exactly where that liquidity is sitting. Let me walk you through the chart, from the weekly down to the 60-minute, so you see exactly what I'm seeing. Weekly timeframe, gold closed last week at roughly $4,119, down from $4,187 the previous week. The weekly candle was a spinning top, indecision, right inside that 5-week support zone. The 200-week MA sits at $3,124, way below price. The 50-week MA is at $4,227. That means we are trading below the 50-week average but well above the 200-week. A bearish intermediate structure within a bullish long-term trend. MACD on the weekly is negative at -47. No bullish divergence yet. RSI at 39.37, not oversold, which means there's room for more downside if sellers take control. Daily timeframe, the daily trend is now officially buy. That's a recent flip. The daily RSI has picked up toward neutral territory, and the daily MACD has turned positive. Price is compressing inside what looks like a bearish flag on the weekly, but the daily is showing improving momentum. 4-hour timeframe. This is where it gets interesting. The 4H printed a strong bullish hammer on Friday's close. Buyers stepped in aggressively near the weekly close. The 4H MACD is showing bullish momentum, and price has formed a double bottom at $4,021. We've already recovered more than half of the decline from that $4,200 high. 60-minute timeframe, strong buy. The 1H MACD is positive, the RSI is above 50, and short-term moving averages are curling higher. Here's what most traders will miss until Wednesday. The real catalyst isn't the CPI number itself. It's what the market has already priced in. The 10-year Treasury yield just hit 4.48%, a 2-week high. The dollar index is holding above 101. Gold ETF outflows have exceeded 80 tons over the past 3 months. All of this is already priced in. So when CPI drops on Tuesday, the question isn't whether inflation is sticky or soft. The question is the market positioned for the surprise? If CPI comes in softer than expected, below the 3.7% annual forecast, the dollar sells off, yields drop, and gold rips higher. That's the bullish catalyst. That if CPI comes in hot, above 3.7%, the higher for longer narrative gets reinforced, and gold retests that $4,040 support. Here's the key. Those levels I just mentioned, $4,133 and $4,040, they're not random numbers. They represent the upper and lower boundaries of the current weekly compression zone. Let me give you the exact levels for the week. Critical weekly support, $4,074 to $4,112. 5-week defended zone, critical weekly resistance, $4,272, 52-week MA, then $4,319, yearly open, daily pivot, $4,105, the weekly pivot point, *** daily resistance cluster, ** $4,138, $4, 159 ** daily support below ** $4,058, $4, 065 The cross-asset linkage here is critical. Oil is rising. The US-Iran conflict in the Strait of Hormuz is pushing crude higher. Rising oil prices fuel inflation concerns, which strengthen the dollar and treasury yields, which pressure gold. So gold is caught between a geopolitical bid and a monetary policy headwind. That's the tension that creates this week's volatility. Let's connect the weekend news, institutional flows, and the weekly calendar directly to the expected price path. Weekend headlines: geopolitical risks are reshaping investment strategies. The US-Iran conflict escalated again. Iran struck a vessel and announced the closure of the Strait of Hormuz. The US Central Command carried out strikes on Tehran, and Iran retaliated against American-linked installations. This is pushing oil higher. Oil was on track for a weekly gain as the strikes continued. But here's the counterintuitive part. Geopolitical tension typically supports gold as a safe haven. Right now, it's actually pressuring gold because rising oil prices fuel inflation, which strengthens the dollar and pushes yields higher. Institutional positioning: JP Morgan sees short-term pressure but forecasts $4,500 per ounce by year-end. BofA just lowered its gold forecast by 14% to $4,360. HSBC also cut its forecasts. What does that tell me? Institutions are divided. But the short-term bias is clear. Hawkish Fed expectations are weighing on gold. The weekly calendar. This is where it gets explosive. Tuesday, July 14 to 8:30 a.m. Eastern Time. US June CPI Wednesday, July 15 to 8:30 a.m. Eastern Time. US June PPI Thursday, July 16 to 8:30 a.m. Eastern Time. US retail sales CPI is the fuse for the entire week. If CPI comes in below expectations, gold breaks above $4,133 and we chase the upside. If CPI comes in hot, gold fails at resistance and drops toward $4,040. PPI on Wednesday will either confirm or contradict the CPI narrative. Retail sales on Thursday gives us the consumer spending picture. The 1 to 2 week directional lean: I'm leaning bearish into CPI, but only because the weekly structure says sell until proven otherwise. The invalidation level is a daily close above $4,133. If we get that, the bearish structure is broken and I flip bullish for the rest of the week. Second interaction trigger: do you think gold closes above or below $4,133 this Friday? Comment above or below. I'm tracking consensus for the week. Most people skip the planning phase. That's exactly where this week's money is made. Keep watching. I'm giving you 2 Monday scalping strategies and 1 3 to 5 day swing strategy. Each one is designed for a specific market condition this week. Strategy 1. The Monday opening scalp. Scalping. High probability. This trade is designed for the first 1 to 3 hours of Monday's session. The trigger condition. Watch for price to retest the $4,121 to $4,133 zone and hold a 5-minute bullish candle with increasing volume. The logic. Gold printed a bullish hammer on the 4H on Friday's close. The 1H is strong buy. Momentum is pointing up into Monday's open. If price holds above the Friday close of roughly $4,119 and pushes through $4,121, we have a clean long scalp entry, $4,125, on a 5-minute bullish candle reclaim above the Friday high, stop loss, $4,110, tight, just below the Friday close take profit 1, $4,145, the first sell reaction zone take profit 2, $4,160, the mid-channel resistance risk or reward, 1 minute and 1.5 seconds to TP1, 1 minute and 2.5 seconds to TP2. What instantly voids this scalp? A 5-minute candle closes below $4,110. That tells me the Monday momentum has failed and sellers are in control. The Monday opening SCLP entry for $1,125, 5M bullish reclaim above Friday high, stop loss $4, 110 take profit $1. $4, 145 take profit $2 $4, 160 risk, reward. 1 minute and 1.5 seconds a 1:2.5 invalidation. Void if 5M candle closes below $4, 110 strategy 2. The Monday liquidity grab, scalping, counter noise. This is the counterintuitive trade, the one that goes against the herd. The setup, there's a massive amount of sell-side liquidity sitting below the market. The $4,081 level is a clear stop-hunt zone, the next major sell-side liquidity pool. Below that, $4,058 to $4,065 is the buy reaction zone. The theory, if gold gaps down or drops aggressively on Monday open, driven by weekend news or Asia session selling, it's designed to trigger stops below $4,100. But that's the trap. The downside liquidity has already been taken. Smart money is looking to trap sellers, not buyers. Entry, $4,090. After a fake breakdown, 105-minute bullish reversal candle stop loss, $4,065. Just below the buy reaction zone take profit $1, $4,133. The weekly line in the sand take profit $2, $4,160. Mid-channel resistance risk or reward. 1 minute and 1.5 seconds to TP1, 1 minute and 2.8 seconds to TP2 warning. This requires aggressive execution. You need to be watching the 5-minute chart closely during the first hour of London session. The Monday liquidity GRAB entry, $4,090, 5M bullish reversal after fake breakdown below $4,100, stop loss. $4, 065 take profit $1 $4, 133 take profit $2, $4, 160 risk, reward 1 minute and 1.5 seconds 1:2.8 invalidation void if 5M candle closes below $4, 060 after strategy 2. Interaction Cliff, are you scalping Monday or swinging the week? Comment scalp or swing. Let's see who's built for this market. Strategy 3 to 5 day swing, trend alignment. This is the trade designed to capture the core move of the entire week. The bias, weekly structure is bearish. Daily has flipped to buy. The swing trade needs to respect both. The trigger condition, a daily close above the 20-day MA, currently around $4,155, with bullish MACD crossover confirmation. But here's the nuance. I'm actually positioning this as a bearish swing until proven otherwise. The bearish swing setup entry, short at $4,133 to $4,145. The resistance cluster stop loss, $4,180, above the first sell reaction zone take profit $1, $4,065. The buy reaction zone take profit $2, $4,040. The key support that is held for 5 weeks risk or reward. 1 minute and 1.8 seconds to TP1, 1 minute, TP2 invalidation. A daily close above $4,180. That tells me the bearish structure has failed. The bullish swing setup, if CPI triggers upside entry, long on a daily close above $4, 133 stop loss, $4,074. Below the 5-week support zone take profit $1, $4,200. The liquidity pool take profit $2, $4,272. The 52-week moving average risk or reward. 1 minute and 2.5 seconds to TP1, 1 minute and 4.5 seconds to TP2 invalidation. A daily close below $4, 074 trailing stop rule. Once price reaches halfway to TP1, move stop to break even. At TP1, move stop to lock in 50% of the move. The explicit invalidation level that would negate the weekly outlook. A daily close above $4,272 would flip the entire weekly structure bullish. A daily close below $4,074 would confirm the breakdown and open the door to $3,887 3 to 5 day swing, bearish, entry. $4,133 to $4,145, short at resistance cluster, stop loss. $4, 180 take profit $1 $4, 065 take profit $2. $4.040 risk, reward * 1 minute and 1.8 seconds 1:3.2 * invalidation * daily close above $4.183 to 5-day swing, bullish, CPI trigger, entry, $4,133 plus, daily close above the line. Stop loss * $4.074 take profit $1. $4.200 take profit $2 $4.272 risk, reward. 1 minute and 2.5 seconds 1:4.5 invalidation, daily close. Below $4.074 never risk more than 1 to 2% per trade. Holding through high-impact event days like Tuesday's CPI requires tighter sizing. Stops are non-negotiable, especially on the swing trade where the daily close is your invalidation signal. Remember, the weekly trend is bearish, and we are trading against it with these scalps. Position size accordingly. This is how you survive to trade the next big weekly move. Let me summarize the single most critical level to watch for the entire week. $4.133. Above it, we are chasing $4,200 and potentially $4,272. Below it, we are looking at $4,065 and $4.040. The weekly structure says sell until proven otherwise. But the 4H and 1H momentum say the bouncer's legs. Tuesday's CPI is the fuse. If inflation comes in softer than expected, gold breaks the line and we chase the upside. If inflation comes in hot, the bearish structure holds and we fade the rally. Here's what I'm watching. The $4,074 to $4,112 zone has held for 5 weeks. If this level breaks on Friday, a clean daily close below $4,074, the whole monthly trend flips and we are looking at $3,887 next. I'll have the updated blueprint for you this Sunday if you want last week's recap to see how we got here. That video is live now. Tap the end screen. Then hit the bell so Sunday's next week ahead alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that define your week.